Yeah, we have somebody that's local now that can always be there to help guests when they're checking in. We just put new signage up. We made the check-in process a lot easier for guests. It's super straightforward now. It's all on an online platform. So I think it's just streamlined for guests, and then putting it in front of them with social media platforms. We're doing what we can to market. We're going to different businesses in the local area, just trying to promote it wherever we can. And that's been really a huge success for us.
Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman. Today we are joined with Josh CEO of Companies, a rising force in apartment and RV park syndication, blending sharp analysts with authentic connections to build lasting investments. Josh, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
If you could let the listeners know a little bit more about yourself. For having me.
Yeah, Josh, thanks for having me. It's great to be here. I've been looking forward to this one.
Lake Elmo, Minnesota. It's about 20 minutes east.
So been in real estate now 25 years.
I live with my wife and our newborn baby. We just had our
from the start of my career through today. And as you mentioned,
it's been great.
Been involved in about 9,400
I started real estate
units across development. We're multi-strategy fund manager now.
Got eliminated,
but our
new job, and in between the two,
our foundations are in property management. In 2010, I started my own company
to find myself,
leaving my mentorship with my real estate dad, my first real estate mentor, and started small as a property manager, buying small assets myself, but also doing a lot of third-party property management for investors around the country. We're buying duplexes, single-family homes, and small apartments.
And that's what really sparked my interest.
We used that management company to grow our own syndication platform.
I kept on reading books. I found another one.
Once we had the track record and a number of exits to show proof of concept, we used that to build a fund management business. And now we're in private credit, acquisitions, and development.
Just a single family home.
Wow, that's cool.
So since then, I've done a mentorship program. I've been
all you did was change
doing everything
the way that your business operated and started being an owner-operator.
And now it's me and my partner.
Yeah, we started real small with big ideas and have continued to layer on that original company.
Where were you at when you first got started with real estate? Did you have your first property
realizing early on in real estate that execution's the name of the game, and wanted to build really good
it was unique, but I just went in head first.
In many ways, it's simple and maybe even a little bit easy to go out and do real estate deals, but to do it right and execute
property
after that closing takes a lot of
no major maintenance issues,
human capital
and
cash
flow to kind of do that
desire to win.
Right. And then I started
that's right, and execute on a business plan and see it through to the end and go full cycle. It takes a different type of person, and to make sure that everything falls in place. Which it doesn't always fall in place, but as long as you get there along the way, you're gonna have your challenges. Well, let's talk about your first big property. Tell us about the first deal. You were operating, how you doing your operations, your property manager. Tell us your first deal when you purchased it. You already had a property management place.
I met quite a few people through my mentorship program, and one person in particular, my partner.
Well, maybe we'll talk about a different deal. The first deal was a duplex. I house hacked. I lived in one side and rented out the other. My father had given me Rich Dad Poor Dad a few years before. He had owned rental properties.
And we worked together to find
if you want to buy a single family house and live in it, you're on your own.
It was in Alexandria, Minnesota, which is a small lake town.
If you buy a duplex, I'll match the down payment.
And we did some more
that was
underwriting
the first start. From there,
and it turned out to be a really good deal.
I started using hard money to do my own deals, small multi-family assets.
RV park, which I wasn't planning on doing.
But I realized I could grow a management company.
It was a package deal,
a little bit faster.
We did the underwriting. We went through different scenarios of
It's tough to offer those services to other investors when
how can we do this? What would the IRR be
when you're not the owner there too? Because then you're only getting paid by the fees you charge.
And after doing some serious underwriting, we did come to the conclusion that it was a good deal at the purchase price.
But changing over to where you're owning the deal and operating it, it's a whole other ballgame.
Now we're in asset management mode.
Started small.
Business plan was
you're already
to take
operating.
Some of these units,
Tell us about the first
and get those rents up to market.
Decided to scale in your first big
the RV park's just a bonus. I mean that's been going great.
It's a progression, right? So I had maybe
numbers for year
18
one.
units,
we're growing like crazy.
duplexes.
It's been really successful.
Let's see, a fourplex.
Okay, so you've got it under LOI, and then I'm assuming you did a property
from there to
tour,
buying a
you did your due
35
diligence.
unit,
Tell us about that process.
30 unit and a 15.
Yeah, it was my first time doing a
those
legit
3 assets
for each unit.
Were simply an investor in an
Class
operating
C property,
agreement.
so
And
we
then
had a
from
mix
there,
of tenants, right? Some
my first
units were
syndication
looking
was
good.
60 units.
Tenants were great, and some.
And I was able to show that business plan to some of my
so that was the
early
big
management clients who
what
I
if with
was
this property
managing
is
their
these units that really need a lot of
duplexes
work,
and small apartments, and they took one look at the business plan for a 60-unit deal and came on board.
And
then from there,
even at a high capex
we went to 97 units, 112, and then
we
we
went
went
to
to 237.
So originally we were looking at
those early days, I was in charge of raising the capital. By then, my partner had come along, who's a much better operator and manager of people than I am.
Is a very low number,
and it was his job to find the best real estate deals.
Property that was very high.
And he had a knack for the management of the team,
and even at that number, raising
the leadership development of the people underneath him. And so I stayed out of his way on the management side and really focused on our equity side, being the best
you're finding out how much the capex budget's going to be.
To the LPs that came alongside us.
Any inspections,
and,
anything,
just
any
continue
unknowns?
to try to be a little bit better every day than I was the day before. And that's grown now to 1,700 investors across. Gosh, I think we've done about 43, 44
after we found
deals so far across acquisition and development.
This is not planned in our budget.
Wow, that's incredible. And it all started small. And then what made you want to find a partner? What made you want to? Because you're scaling. Obviously, you need people to scale. That's the cool thing. When you find a partner, because that way it's a win-win at the closing table.
As a founder, I started really looking at what I was really good at, what my gifts and talents were, and recognizing that there were a lot of gaps there, and what it would take to fill out a complete business, a complete team.
Right.
And
very cool.
I learned
what kind of
early
debt
on,
did you take out, and then
know
how
thyself,
much equity did you need to raise?
And focus on what I could do really well and my strengths.
We got the terms
and find other people that were strong in those areas that I'm weak in.
Because it is a smaller market.
And it started off real simple. Hey, let's go put a deal together and see how we like working with each other and see how this works. And gosh, it's been one of the greatest blessings of my business career. Probably right up there with my spouse, my wife.
$500,000 in capital,
which together, was a great, first deal size. The saying goes, the whole is greater than the sum of the parts. And
when you first get into this,
it's worked out really well for him to focus on what he's good at, which is the operations, the execution, the management and leadership development of the teams. And I know that he's going to take that baton and run with it while I'm over here on the other side, focused on getting the equity.
Far exceeding our expectations in terms of
investor returns. What happens if you can't get the equity? Is it's different times. There's other people behind you as well. Because there's a lot.
No, that's myself and my partner Zach.
A lot waiting. Okay.
Yeah.
I mean, how did you all? Because you're all new operators. I mean, this is the industry, new operators, no proven track record. So
I'd be lying if I said it was easy. That's for sure. We've entered the third time in my career.
That's a good question.
So first things first, and there's
I went through my entire network. Everyone that I know.
So we've had to work twice as hard to raise the same amount of capital. We've raised about $250 million
just started contacting
since January 1st.
Now this is after I knew what I was doing through the mentorship program.
The valley and the cycle. And it's been a great time to buy. It's been a pretty terrible time to sell real estate. I think we're coming out of that.
I was looking for an example deal.
Luckily, we've got the balance sheet and liquidity and great lending partners and a large pool of investors that are still allocating capital. We've had to grow that pool of investors.
And then I just started.
Again, we've had to work really hard to get that capital in the door. Thankfully, we've got a lot of levers we can pull to even deals quickly and continue to raise through our fund structure and our own balance sheet.
To be very outgoing,
we've got some capacity there. So, it's been really tough, and we've had to work different muscles.
To be an
whereas
extrovert.
Before, it was really hard to find a deal. And
what do you do for a living? And you look like my avatar.
And these vintages, these years that we can buy when most people are hesitating or staying on the sidelines,
career,
historically have proven to be some of the best years to close on opportunities.
Success the only option.
That's
so
for sure.
And you mentioned your balance sheet. No matter what the deal's getting done. It doesn't seem like a lot, but just take advantage of the times. $500,000 is a lot. They can invest later truly starting out with no track record.
Yeah, absolutely. And if if I were to go out there and say that I can close a deal and not close it, that would really affect my value in the eyes of the brokers and the institutional partners that
it could be the greatest deal in the world, but you still have
one thing you really want to avoid.
The selling point that the operator's not going to ruin a good deal, and that's where a lot of
I think the other thing too is that to a lot of people that have never heard of this,
can do or will do.
So building that trust in something that they don't know about
you know,
is huge.
if
So
I
teaching them
had
what it is in a
not
way
started
that,
small and
it's
built
not-
brick by
not
brick,
gonna
I'd
scare them away
probably be
was
still
huge
sitting
for me,
around
learning
dreaming
how to
about doing
navigate
big
that,
deals
right?
one day.
Because people just see this and
a lot of people
immediately
want
they say,
to
no,
be
that's
that
not
person,
for
and
me,
then
right? So being able to navigate that has been
like you
huge.
mentioned, you have to grow in steps.
Very
Your
cool.
brain has to
So
get
you've
there as
got,
well.
you
did your due diligence. You started raising capital, but
you've
your
got
partner,
your
he's the
lender,
integrator,
which
which
is
is
local
local
lenders,
lenders. Regional
like-
banks are great to work with.
If you're an EOS fan, we
they get the
are
insurance
we're
play.
definitely
They,
firmly in
they
those
understand it,
molds,
then you gotta
very
make it compelling,
opposite, and I would
compelling argument
very
that you're the
much
operator. Which are you all
classify
managing it
him
and
as
operating it, or
a
do you have third party in
world-class
front of you?
integrator.
We have third-party
That's
property
huge.
management.
And
Yeah,
you,
that's
you're
for the
essentially
apartment and for the RV
two different
park.
places at the same
I
time.
would
So
love-
you have different goals,
Yeah, I would love
and you
to
leverage
know.
their experience to help get it closed too.
We're rolling the boat
for
in the
sure. I
same
mean, we went
direction.
through and leveraging
and,
their experience
when it
of
comes
the
together,
rents,
it's a
what do we
beautiful thing.
realistically think we can get them
for sure.
to if we do these
Very
types
cool.
of renovations?
What would be some things
at
that you
time
wish
of
you knew
exit,
then
what do
that
you
you
guys
know
think,
now that would have
in terms of
helped
exit
save
cap?
time,
And I
or
like to be
less
conservative in that
acreage tax
aspect.
you would have had to pay?
Just really leaning
Oh
on
gosh,
them too.
paid a
and
lot
they
of
think
tuition along the way, man. I feel like
So
I've
one
made
thing
just
that I
about
did
every
when I first
mistake in the
started
book.
out, because of course everyone starts out
We've
somewhere.
tried to
It's always zero.
outsource like
But,
equity placement from time
I
to
started
time by
an
bringing
account with
in
Buildium, and Buildium's
partners
a
that say they
property
can bring
management
us a lot of
software. So they were
investors.
using,
That's
I can't
failed
remember, but
almost
property,
every time.
but we'd pull
What's
reports and we would
worked
actually
is
put our
treating
financials in
current
Buildium,
investors
and we
really
would just
well.
mirror
They
rents
tend to refer
collected
folks, and that is still the second, or the, excuse me,
I
that's
would
still the
have a
first
full operating set of books where you log into
place
their
source for
system. You
new
can only pull
capital
reports versus
is
mine. You can actually
referrals.
see true data.
We
So just
advertise.
mirroring
We've got our
what
own internal
the
sales
financials
team
that we were getting month over
that's,
month, be able to
bringing people
reconcile
through the
and
funnel.
really seeing a different
But,
light.
yeah,
But
internalizing
we were
things.
doing
We
that
could
for a
go
couple
on here
years,
for a
and then
long time
it got
about
to
all
a
the
point where
mistakes we've made.
we
I
just
think
it was ready to take it
what I
over
would point
on
out
our
maybe to
end,
the new
operations too,
aspiring
because you'll
entrepreneurs
get
in
to a
your
point
audience
where you need more
again is
control
to
over everything.
take it
Especially if
slow
you're going in, you're renovating,
and
you're
really
leasing it, you're
focus
doing
on
all
what's
of
the
the
next micro step,
armpit
what's
work
the next
anyways,
brick you can
and
put
then
on
you
the
want to
wall,
totally control your
and
financials
maybe not
and your
worry so
spending.
much about where you want
But
to be.
having that
You want to
functioning
begin with
system
the end in
already in
mind, but
place,
then just keep rolling back to
it wasn't
what
starting
do I
over. It
need to
wasn't
do
starting from
today
zero
to
because
take
we
one
were
little
already
step in
used
the
to the
right
system.
direction,
So
and then really get into
just for the
the
listeners
habit of
that
that.
are new to it, that will eventually get to
You know,
an
we've made
operator.
mistakes
That's
where,
one
you know,
method
buying
that we
properties
use,
thinking we're going to improve them
which
out of
helps.
cash flow.
On the RV side, what are
We've
you
made
seeing?
mistakes
How are you
buying,
seeing
you
that
know,
go?
using debt that wasn't
that one was
hedged with
very new. I
with a
mean, we
rate
kind
cap.
of had to
all
relook at how
kinds
we
of
underwrite this thing. I mean,
things
we
we
can
can
use
dive
the
into.
same
The list
basic
is
principles,
long.
but it's a campground and it's basically,
I don't think there's any
short-term rental,
sort
right?
of
'Cause there's people that are just coming in for a
manual
weekend. They're doing
for
nightly
founding
stays.
and running a
So
business out
underwriting
there.
that and forecasting what we
You
think
just
we
got
can
to
get
do
in
it.
terms of
You
revenue
got to
was a
know that you're going to make
completely different
mistakes.
thing,
Know that,
right?
that
So we went
managing
super
teams
conservative
and
with
managing people
the
is
numbers,
much harder
in
than the
terms
real
of
estate.
what we think we'll get year
And
one,
it takes
and
takes
so
tinkering.
on.
It takes
We took what
iterations.
the previous owner
trial
had
and error.
gotten
But once it starts humming,
and they weren't on site.
it can
They
start
were
to
just
grow
kind
this
of running this
unstoppable
thing,
momentum.
from a different state.
So
and
for
they didn't
taking
get
out the wrong debt,
too
or at
much
the
revenue,
time
but
it's
that's the
probably the
number that
right
we
debt,
plugged in
but
for year
then
one. We
things change
assumed
in the
we could get
economy and
higher
then it
by
becomes the wrong
marketing,
debt.
really going out our way to make this thing
What are
better.
some,
But we
because
put
this is
those
good for the
numbers in,
listeners,
and
because again, we're
like I
trying
said,
to
we
help
far
people
exceeded
from not
that
digging
by
their own
using social
trench when they
media
don't have the
platforms
head to get
to
themselves
market
out
our
of.
RV
What
park.
would
We
be
went in
some
and
things that
also
you
applied
would
some capex
tell
to that,
a beginning
fixing things up, making
investor,
sure it's a
beginning real
nicer
estate
place for
investor
people to
of
stay.
what to watch out for,
And
how to play it
yeah, we
smart,
are happy
play
to
it
say that
different.
we've already hit pretty much our year
Yeah,
5
you know, the
target
more you
of
can learn
revenue.
about
We're
finance,
not
the
even done
better.
with the season yet. So
There's talk out there,
I think
floating
that
rates are
out
bad,
of the two
you know,
properties has
or
really been the
a
home
bridge
run
loan
for
is
this
bad,
deal.
or this
And
product
that's
is
just
bad.
kind of the cash
They're
flow
all just
king
tools,
for us.
right? And
What were the low hanging fruits on the RV that you all put in place that the other owners were not doing at all to boost revenue?
ahead and
yeah,
your life,
we have
right?
somebody that's local
And
now that can
knowing how to use
always
these
be
tools
there to help
appropriately.
guests,
So
when they're checking in. We just
floating
put
rate
new
can be a really
signage
great
up.
option
We
for assets.
made the check-in process
Hedging
a lot easier for
that
guests.
floating
It's
rate
super
is
straightforward
critical.
now. It's all
having
on an
more
online
cash on
platform.
hand
So I think it's
is
just
critical. So
streamlined
what
for
saved
guests, and then
us
putting
is
them-
we've always
putting it in
kept
front of them
more
with
surplus
social media
cash
platforms.
inside the
We're doing
portfolio
what we
or a
can to
fund
market.
that we're
We're going to
constructing
different
versus
businesses in the
distributing
local
it all.
area, just trying to
We're
promote it
raising
wherever
just
we
enough
can.
equity
And
to
that's been
close the deal.
really
We'd
a
like
huge
to raise
success
more
for
than
us.
that and
Very
have
cool.
surplus
Good deal.
reserves
So
above what the
multifamily and
lender
RV
mandates.
on the one property, and
Having
one supports
surplus
the other.
cash
Is it in an area
at the
where
portfolio or the property
it's just
level
year-round
for a given
travel,
fund or
as far
given
as RVs
asset
go?
can smooth out
No,
those
not
inevitable bumps in the road that are
round.
going to come from
in the
somewhere.
wintertime, we're
Nothing ever
closing it
goes
down.
exactly
It gets
according to plan. At
frigid
least
cold
I
here
haven't
in
seen that
Minnesota.
in my journey so far.
We are trying to look into
9,000
maybe
plus units.
storage, outdoor storage
Got
for
it.
RVs
When
for
you're
the wintertime.
when you're
We're
buying
trying
the
to
property,
really think through
I
how
mean,
can we continue to
want to buy
generate
it based on
revenue
cap
throughout
rate and what the
winter
existing cash
months.
flow is, but there's times
but like
where
I
you know
said, we're
that
just
the
looking
area
at the
is up
summer
and
months
coming,
for
and
revenue,
you need to buy at a
and,
basis that's
we hit that
uncomfortable.
target.
But you can get
Plug
it
that in ChatGPT.
I don't know if that's happened to you, but it was definitely the times
Right.
in the
Seriously.
past. But what would be the other property that you all, I guess, the guidance you would give for someone who's
So that's
looking
a
to purchase,
24-unit apartment
but
complex.
it doesn't,
actually used to
it's
be
a value add,
one
and there might be different
resort. And they
different
converted
hiccups
the,
that you might be aware
the
of.
resort side of it.
Yeah, I
into
mean,
an
we're
apartment
on the
complex a
value
few
add
years
game
back.
here.
So
Real
we purchased
estate,
that.
if you're buying something that there's no
And
value to
that
be
one,
added,
like I said, it was a
pretty
little bit
mediocre
more of a Class
return,
C. Definitely
like
needed some
other
work.
asset classes. So
Vacancy numbers were
forced
good at
appreciation,
time of
value add
purchase.
is the
So
name of the
we
game
just
in
saw
our
the
business
opportunity to go
in this
in
space.
and
It
do
is in
some work on
most
the units, not make it anything
real estate
crazy
asset
like
classes.
a Class A, but just clean them up a bit, make it a little bit nicer place to live.
What my mentor said to me a long time
years
ago
and,
was, I don't
exit when it's
necessarily
right.
care
We
what
actually
the
want to
cap
split
rate
the two
is.
assets. So we
I
want to
care
hold
more
on to the
about what
RV
I can
park if
do to
possible
the
for
asset.
cash flow. And
Having in-house
exit at year
management,
3 to year 5,
knowing
get those
exactly what we can
investor
run something
returns
for
back,
is very
and
helpful
then
there. So we can,
just cash flow.
basically take the seller's numbers
get
and
the
throw
NOI
most of that
stabilized, and maybe even go in
non-controllable
for a credit line
part of
to get them
the
made
P&L
whole,
out,
and then
and say, okay, what can we run
the
this
seller
with using
refinance the
our
whole
maintenance
thing.
teams,
Yeah,
our
full
management
structure.
teams, our tech
So
stack,
what are you all? What kind
our
of underwriting
accounting
are you doing? What are you
solutions.
looking for?
And then
Yeah,
what
this
does
one,
the
I mean, I
upside
like
look
to
like,
see
right? It first
a
comes to the market
DCR
itself,
from day
what's been
one, right? I mean, if we're going to
underrented.
the bank,
Can we take these rents higher as they turn over? Are there ancillary income
property,
opportunities
right?
that
value add,
the seller
we're
hasn't
go in and
fully
understanding
utilized?
that we really need to put in
Right.
some work.
And is the
But
market itself,
we
is
buy
it growing?
That's cash flowing.
What's the
This
supply demand
property was that
ratio
but it did
look
have
like
that
both
value
now and in the
add
future? What's coming online
play
as far as new assets,
So we went into this.
especially
I
for
always
us,
want to have
because
something cash
we're buying
flowing.
Class A
I like the
mismanaged
thought of
assets. So
big
we're
IRR,
looking for those
but I like the
under
thought of
or
cash on cash
mismanaged
even more.
assets in the Class
And I
A
think my
category.
investors especially
So
do
those
like
things
the
have to
thought
be
of
really
being able
important.
to get their
Got to
cash
kiss a lot of
flow
frogs to
So
find
we
one
went
that
into
makes
this,
sense.
We saw
but
that
what's
they
happening
were
out there
operating-
right now
operating
is
it
only
okay,
the folks that
but we
really
had
have
a lot
to
of fixes
sell
that we could do in
are
terms
selling.
of revenue, gross income,
And anyone else
some of the
that can
expense
hold
numbers
through
that
this
they
part
had
of the
were
cycle is
pretty darn
typically
high,
holding.
especially maintenance.
So the
If we go in with
opportunities that are
CapEx,
coming
really fix up some
along
things,
are what we're
long-term
seeing are
fixes, instead of
in
just
many
trying to put a
cases a
Band-Aid
little bit
on some things,
juicier
we
than
could
they
get
have
those
been in the
maintenance numbers
past
down.
from an
So that's
upside
kind of
potential standpoint.
our plan. Our NOI
They're just
year to date has been,
they're coming against maybe maturing debt. Their partners are starting to want to let it go, or they're
Well, that third party
cash
property
flow.
management,
What
they
are
have to be
seeing?
on board too with
Most
your
of-
plan.
Yeah,
So how
pretty
has that
much
been
all the
going?
above. So what we're
That's been
what
good.
we're,
Actually, they are the ones
our typical targets
that have
the
been helping
last
out with
couple
the
of years
renovations
have
as
been
well.
either
So
a large
they've been a key player to all
fund
this.
or group that maybe
sometimes
only owns
my
one deal in
partner
that
and I,
market. They've got a
we'd like
third party
things to move a little
manager
bit
that we have
faster, or
targeted
we
as
have
a
the business
mediocre
plan
management
locked in,
firm.
and they've been pretty busy.
They're a
But
mom and
overall,
pop
it's been a
operator
really good
that
partnership
sure
with
they
them.
thought they were going to sell
It's
it for
just
more a
navigating
couple
that
of years
dynamic
ago,
with a
but now they're
third-party
sort of
property
capitulating to the
manager, 'cause
market.
they have
They want to
other
get their
properties to
liquidity
look at, too.
out. They want to go do
making
something
sure
else.
that they know the exact
And then
business plan,
developers that are
our
being
timeline,
forced
our
to
budget,
sell
and
because
them
they've got
sticking to it
maturing
has
debt,
just been the main thing.
and their
Yeah,
LP
it's,
said, "Hey, we're selling this
how
asset
far are
for
you all from the
maybe a
property?
small small loss just to get liquidity back.
Okay.
And those have been
that's hard for you all
scenarios
to bounce in and
that
out
we're seeing out there that are offering or showing opportunities
that's one of the
for what
biggest
we
leads
target
to
for our
cash in general
investors.
is labor and material. What does your all's tech stack look like on the property management
finding
side?
local resources and then being
Yeah,
savvy with your
so
purchasing
it's
it's coming
without
from.
getting into some of
So
the
are you just
secret
giving line item
sauce.
budgets
We're
for
always looking for
renovation
ways to
materials
do more
to them, and they
with
have to
less,
go
whether
find it?
that's through
Yep,
AI,
pretty much. I mean, we're working
through
together because
offshoring,
they're getting
through
estimates. They have
technology that makes us
relationships
better
where
at
they
our
buy in
job.
bulk for other properties as well. So we're kind
And
of going
then
through, and they're giving us
comparing
estimates of
that
materials,
with the
and then as
current
long as it's hitting what
operating,
we're looking at, yeah, we're going
the
through line
current
by line,
operator,
giving
the
them a
manager,
budget,
and what
and they're
their
also giving us estimates on
expense
units
load
based
looks
on
like.
you know
And so
where they're at. How much
typically we're
material they
finding
have
some
on hand, or how much
economies in
did
some
they
of those
purchase before at
areas
the
as
time.
well.
Right, and then their labor
AI
estimate.
right
what
now,
they think it's gonna be.
new iterations
They're just
come out of AI
plugging in
every
their
day. So
maintenance
it's
labor,
like you can
hourly
invest
rate,
now
and
and
they're
it'll be
dedicating
outdated
one
next
employee
week,
to fix up these
or
units.
just
Got it.
be
Maybe a
ready.
weekend road trip until
I
renovations
agree.
are done
Phone
to
call comes in,
inspect and sign
and that
off
can
on
Pretty
be
the
much.
handled by
Yeah, or maybe stay at the campground and
conversational
kind
AI
of
right now.
keep an eye on things,
But
right?
but
You
you,
still
I mean,
need a
and
person
behind
it's
your
your
investment.
investment.
You're
You're
the
things are still
you're the
being
jockey on the
directed
horse.
where
So
they need to
if
be.
not, then who?
It's
And I
still
can
a
tell you they
human
don't care
touch
as
game,
much
and
as
I
you do.
think some
Exactly.
folks are
So
overcorrecting
duty and
towards AI
responsibility,
and
but
thinking that they're
you know,
going to centralize
it's all one-time
everything
thing.
and
So it's not
fire a
something
bunch of
that's going to
people.
continuously
Where at
come. It's
BAM,
one-time things
we're
that you just have
more
to
focused on
you have
how
to
do we
get
make
through,
our people
and
better at their
next year and the
job, more
following years it'll be
productive,
worth it.
Right.
than how can
Especially
we
the quality
fire
piece.
people
That is
and just let
that
AI
is truly the
handle it.
armpit of the
So
business
we'll
is
see
the
the
labor
jury still
and
out.
making sure that
Yeah, I think it's all getting done.
I think it'll
to
enable a lot of
expectations.
growth because if you can still keep your high-performing people
So
in
what's
place,
what does
and
the future
then,
hold? What are you all looking at?
be able to
the next
ingest even more and give a higher level.
Yeah, I mean,
higher
lately
level
we've
just
been really
customer service,
building relationships with
faster
specific
ticket
brokers,
response,
especially after getting this
maintenance
deal
getting
done.
done,
Once we could
automated ticket
prove that,
closings,
hey, we
which
can do this,
a lot of this
it
stuff
kind
can
of
be
shifted
done
the
right
way
now
that brokers
easily. It's
approach
just
us, which has been
the
great.
difficult
So we're
tasks
building
being taken
relationships
over by
with a few
AI
different
in order
brokers around
to
the Twin
then
Cities
scale
and
your company
tertiary
even,
markets in
even doing
Minnesota.
more with less.
And I'm also
Sure.
calling
Yeah, I
owners
agree.
directly to build that
What
deal
kind of
funnel.
platform
So
are
the
you
hope
all
is to
running
get
off
another
of?
deal done
We're at
within
Folio.
this
I don't
year,
know
and we're
which
kind of looking at
what
that
you run
20 to
9,000
50
units
unit
off of.
range based on the
Yeah,
price
we
per
just
door.
moved off
Here in
of
Minnesota, that could be
Appfolio. That's
anywhere
been a
from,
heavy lift,
you know,
and we've
80 to
been
120.
converting over
And
to
we're already working
Entrata.
with investors. We're
Okay.
building our
Yeah,
capital
so
pool, which
very
has been
excited
great.
to see
And
the bells and
like I
whistles
said,
and the
it's just finding
automations
that
and open
specific property
platform
that
that we
hits our
can
return
add to
metrics,
Entrata
using
versus
our
Appfolio, which is
specific
closest.
underwriting style. You
That's
know,
interesting.
exit cap
We were on
that's higher
Appfolio
than
for
time at
years.
purchase
Yeah,
in the market.
yeah,
You know,
and
we have to be
usually,
conservative, especially being newer. We got to make sure we get these investors their returns. So
Josh,
we
I
are
lost
taking our
audio
time
there.
to make sure we get the right property.
Yeah, I'll tell you one thing that I like to do. It's not a requirement. It's not even anything.
Got
It's
your
just
back.
going more of an integrity thing, going above
and
beyond.
try to-
Sending
With the
a
live?
weekly email to the bank. If you don't have investors, you don't have partners.
I guess
Just send
full
at least a
ERP
weekly
stack
progress
and
update to the
or
bank,
you
to the point of
plug the other
contact.
pieces
Especially
into
if there's funds that
Well,
need to be
so
drawn
far,
down for
really, it's just
renovations.
getting
But they like
Entrata
seeing
up and
updated pictures
running,
before
and
and after
when
and
you're
during.
converting that many units
And then
over,
having a
it's a
separate
full
G Drive
year-long
folder
process
with
to get
renovations
it
before,
all
during, and
up
after,
and
along
running.
with the rent roll.
Completely off of
Again,
one
it's
onto
just
the other.
being who you say you are,
So
and doing what
it's
you say you're
anything
going
but
to do.
seamless
But
behind the
it's
scenes.
trust is based on
Yeah.
performance. So
I
here's
like
the performance, here's the
what I'm
pictures,
seeing so
and
far
that
from
builds
a
trust on
business
its own too.
intelligence
And it's
standpoint,
keeping all
the
the
ability
bank is your partner,
to
so
bring
keeping them in
in
the loop and
other
letting them know their
tools and
assets
add
being
that onto the
taken care of.
Entrata platform.
It's
So
partnership. So
jury's
that's
still out. It's
that
still
helps
early in the
portfolio
game, but
growth
I'm
down the road as well.
pretty
that's
darn
great.
excited and
Very cool.
cautiously optimistic.
What would be some
be
advice
an
that you would
enhancement
give
for us,
for
for sure.
a new
the
real
business
estate investor
dashboard
looking
where
to
you can
break
start
in?
seeing around the corner?
When those
Yeah, I think
things
it can
start
be pretty
plugging in,
daunting,
different numbers start lighting
especially
up,
as you look at
different
everything
metrics
that
and
we need to
ratios.
know and do in the network that we need
That's
to build.
where I think it can get really fun. It's still hard to
First of all,
finding
knowing what you're
an actual
doing by
software that
really
can
learning
bring
from
next
someone
level
that's
analytics,
done this
plug
before,
in
that has the tools in place.
seamlessly
That's
into your
number
current
one. You got to
financials and give
learn
you a clear
everything
vision.
there is to know. Obviously,
we've tried out
you
a
learn
few
through doing as
and
well.
I'm still trying
My
to find
partner and I
that,
were learning through this
that
first
next level
property.
visionary
But knowing
dashboard.
the ins and outs
Yeah, I
enough
hear
to
you
be
there.
talking to
It's
professionals
but it
in
definitely
the
helps.
industry.
What about underwriting?
But once you
Are
know
y'all
what you're
are you
doing,
still doing it
it's
manually on the
taking it day by day and creating.
Oh yeah, underwriting still guys rocking Excel sheets.
That day.
Yeah,
I think I remember taking a step back and looking at my goal and feeling.
Yeah, I don't think Excel goes away for us anytime soon from a modeling and underwriting standpoint.
Contact the property manager, set up a meeting.
You need that human in there that can recognize the data and have that fingertip feel when something doesn't look right.
You have to be patient. You have to work hard.
Yeah,
but you can do it.
20 units, so keeping them engaged, keeping them 100 units, the growth, and 200, and the mindset, so on and so forth. So, but yeah, like you said, you have because 9,000 units, keeping everybody rowing in the same boat. You have a lot of personalities to maintain. Very cool. Josh, definitely appreciate your time. If somebody wants to reach out, learn more about yourself.
Well, you said a mouthful there. It is a never-ending battle to grow and maintain
so you can send me an email. It's Josh
we get all the teams together a few times a year. BAMCon is coming up in October, which is our all-company conference. 2 days of education.
We can chat on there.
Communicating, big things to the team.
Josh,
also some fun and some social activities.
Look forward to following your growth. Thank you.
But that's been something that just keeps getting better and better every year. The team just does an incredible job with
Welcome, Real Estate Hustlers Podcast. I'm your host, Josh Appleman.
We bring everybody back for a Christmas party every December. It's like a big blowout wedding / prom award ceremony. Everybody's dressed to the nines, plated dinners, no expense spared.
Josh, we appreciate you coming on the show today.
If you could let listeners know a little bit more about yourself. Cookout every summer.
First off, thanks for having me.
And quarterly events to keep folks engaged.
I live in Lake Elmo,
Minnesota. The day-to-day, we still use Slack. Microsoft Teams is a little bit too corporate for us. We like Slack.
Baby. We just had our
one of our core values. We've got a little bit of a fun, quirky spirit around here. We don't take ourselves too seriously.
It's been great. Very busy.
So Slack's one of those great platforms that brings people a lot closer together when they're spread across 7 states now.
My W-2 job got eliminated.
We got everything operating off Office 365, and then we still
took about 4 weeks off.
Nice.
You just can't replace Slack for some reason. Like you said, Teams just doesn't have the same deal. You got everything integrated into one, but you just can't pull out of Slack.
Teams is a little bit too straight laced for us.
Rich Dad, Poor Dad was the first one.
What would be some books that you would recommend to some of the beginning real estate investors out there?
Generating income besides just
you
a
really
normal W-2 job.
Got to go back in my file retrieval system here. So beginning real estate investors,
ways to make money. I kept on reading books.
I don't read as many real estate books these days as I read biographies of folks that build big companies.
And that's when I had the eureka moment of, okay.
But I think if you're just getting started off in this business, you've got the classics. Everybody says Rich Dad, Poor Dad. But there's a lesser known book called
a mentorship program. I've been analyzing
Robert Kiyosaki had like 15 different guest
on our
authors
first deal earlier this
year.
year,
Real estate.
And now it's me and my partner.
Maybe you remember this one, but it was
property management, the tax, they all came together in one book.
Where was one that he had a bunch of guest authors write about all different subject matter of real estate. So for the really early entrepreneur, you still wanted to understand all the different ways to make money in real estate.
It was unique that I just went in.
That could be a really good one. Hats off. Kenny McElroy's a good buddy now. But his early books on property management and real estate syndication are still really good.
10 years.
Man, you're really on a Monday afternoon testing my recall here.
It's good to hear some different titles because there's a lot out there. But if you're filling your knowledge, your brain with knowledge, different books, different perspectives.
Like I said, that was
just try to level
early
your
light bulb moment.
Yeah, early on you read the real estate books. There's Maverick Real Estate Investing and Maverick Real Estate.
Well, let's talk about your first big property.
I hope I'm getting those titles right for your audience, but those are a couple ones that aren't brought up as much. That are also chapter by chapter these different strategies in real estate and the folks that put those strategies to work and sort of their backstory on how they use private equity or public markets and everything in between to grow real estate.
And we worked together to find this property. He had a broker
Ivan, we definitely appreciate your time today. If a listener wants to reach out, learn more about yourself, learn more about your company, possibly invest with you,
how to get a hold of you. At the end of the year.
BAMCapital.com.
We did some more underwriting together.
Good deal. Definitely appreciate your time. Look forward to following you, and we'll certainly talk soon. Thank you.
It's a 40-lot RV park, which I wasn't planning